Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Doug Krisner. We begin in Japan, where the yen has been under a great deal of pressure lately, despite last week's rate hike from the Bank of Japan. Now, as expected, the BOJ did raise its policy rate 25 basis points to 75 basis points. Now, that's a 30-year high. Even so, the yen weakened by more than 1% against the dollar, with much of that decline coming after BOJ Governor Ueda's news conference, where he kind of refrained from a particularly hawkish message. And within the last 24 hours, Japanese Finance Minister Satsuki Katayama expressed deep concern about the yen's decline. Speaking to Bloomberg, Katayama said that Japan has a free hand to take bold action against currency moves that are not in line with fundamentals. That's where we start our conversation with Sayuri Shirai, professor of economics at Keio University in Tokyo. She spoke with Bloomberg TV host Annabelle Droulers and Avril.
The question is, though, any sort of jawboning we get from government officials has had the tendency to be quite short-lived.
Yeah, so they can intervene in the foreign exchange market, that's possible. But at this moment, the main reason why yen has been so weak since 2022 is because of the big interest differential, especially in real term. So Japan's policy rate in real term is minus 2%. So it's very difficult to increase this interest rate because Japan's inflation is around 3% cost-push inflation, and policy rate is just 0.75%. So very low real interest rate. So it's very difficult to change this trend at this stage.
Yeah, exactly, especially when you've got the BOJ that's really not moving in lockstep with other global central banks. I mean, it's very difficult to arrest those moves. What then do you think is the outlook for the currency, and as well, what is the priority that government officials are likely to place on that weakness?
So, government is changing their strategy. Over the past years, Prime Minister Takaichi was always criticizing Bank of Japan's raising, interest rate increase policy. But I guess since, October, yen started to depreciate even more. So they know this is really creating cost-push inflation. So maybe there are compromises to some extent. But the Japanese economy is so weak. So that's why Governor Ueda cannot be so confident about raising interest rates. So this is a dilemma. So next year, it also depends on what will happen to U.S. policy. If U.S. shows very determined path toward lowering interest rate, that might change this exchange rate towards somewhat more appreciated level. But still, I think yen will remain at a very depreciated level next year.
Sayuri-san, on the issue of U.S. policy, when it comes to, I guess, the signals of intervention, how on board would you say the U.S. Treasury is with it? Is there a tacit understanding between the U.S. and Japan on this?
So U.S. Treasury, I think they will accept it because Japan is trying to appreciate exchange rate, not depreciating, creating competitiveness. So, it's a different story. And I think also, U.S. Treasury is always say Japan is behind the curve, Bank of Japan is behind the curve. So maybe it may suggest more policy rate increase by Bank of Japan.
What would you say is the sort of yardstick? I mean, the BOJ has been reiterating that there's no specific level, or finance authorities in Japan, I should say, are highlighting there's no specific level. But what is your sense of how we can tell the levels in which they might step in?
Yeah, so 160 is very dangerous level, and that is a time that Treasury intervene. So we have to check, but still, even now, it's very depreciated level. So we are, this is really creating a very bad cost push inflation. This is the biggest problem. So I think people are worried that yen stay at very high depreciated level, or maybe even depreciate further if the Takaichi is going to do more fiscal expansion policy in 2026. So 160 is, I think, quite a dangerous point.
On fiscal policy, how aggressive are you expecting the extra budget, the forthcoming budget to be from the Takaichi administration?
I want to say two things. Takaichi-san is trying to show that she's a very bold, expansionary, doing fiscal policy. And so recently, she showed some tax cut by expanding, income tax deduction. But to be honest, in Japan, people are paying more and more social security, premium and payments. So that is really a lot. And also a lot of people are still paying sort of de facto inflation tax, right? Because we have a bracket clip. So considering all this de facto inflation and social security spending, I think the net tax cut is very small. So I think people do not feel that their lives are getting better. Also, her policy is really trying not to directly influence the food prices. Food prices have increased over 28% in these 4 years. Energy is just 13%. But she never really tried to deal with, reducing, say, food consumption tax, for a while, and she tried to avoid it. So, even she tried to do a lot of things, but she's tried to, allocate a lot of money to local government, discretionary spending. So she doesn't really touch on these extremely high food prices.
Yeah, and of course that's such a big component of inflation, or the inflationary basket. What do you think then about the outlook for next year? Because when you've got the government officials rather in Takaichi's government that's very focused on more of an expansionary policy, and that goes up against the BOJ that's looking to hike, and you've seen that agitation in bond markets as well, really with yields rising across the curve, and that limited spillover so far, but spillover into US, UK, German bond yields. What sort of risks are you monitoring then in global bond markets?
Yeah, so 10-year yield is now reaching 2%, still relatively low, say, compared to 30 years ago when the policy rate was at a similar level. 30 years ago, 10-year yield was, around 4% or 3%, so much higher, right? So, I think long-term yield is still low, mainly because BOJ still holds nearly 50% of long-term government bond. So, of course, there is a tension here. I'm pretty sure Prime Minister is trying to show another expansionary fiscal policy, but probably limited impact for the increasing disposable income in next year. But there is a tension here, so I think it's very difficult, especially for the BOJ monetary policy.
That is Sayuri Shirai, professor of economics at Keio University in Tokyo, speaking with Bloomberg TV host Avril Hong and Annabelle Droulers here on the Daybreak Asia podcast. Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. It's a holiday-shortened week for markets. Earlier in the day in the States, there were broad gains for equities, with the S&P 500 rising by 0.6%. Now, on Tuesday, we'll get the initial reading on third-quarter economic growth. Bloomberg Economics is estimating the American economy likely grew more than 3%, supported by robust consumer spending and modest gains in investments. Earlier, we had the chance to visit with Bank of America CEO Brian Moynihan. He said artificial intelligence is starting to have a bigger impact on growth.
I think that's part why the reason we feel constructive for next year. We think AI spending continues. We think there's benefits to the American taxpayer from tax rebates, lower taxes due to the tax bill going through and being effective for next year. And we think the expensing and other bonuses for businesses are good. So all that leads to our confidence that we go from basically a 2% type of growth level this year, plus or minus up to 2.4%.
Brian Moynihan there, the CEO of Bank of America. Now, Moynihan also said that B of A sees relatively limited risk to the economy if the AI industry became too overheated and had to pull back. For a closer look now at the AI trade, I'm joined by Peter Gardett. He is the CEO of Noreva AI. Thank you for making time to chat with me.
It's great to be here.
Do you expect this trend in AI to continue, what we have seen right now in terms of the build out of these data centers from hyperscalers? Is that a trend that you expect to continue well into 2026?
I think the interesting thing about the timing right now is that we've seen an enormous number of headlines, right? There's a lot of press release money, as I call it, out there for around AI. People have announced enormous CapEx plans. But if you look at the actual financial results, the financial reporting of these firms, we have yet to see a lot of CapEx actual steel go in the ground. You don't just, when you have AI, you're not just talking about the software and the chips. You're actually talking about the power that's needed behind it. And, for all that we're announcing, a lot of new power plants, a lot of new power capacity in the United States, the actual energy itself has not come online yet. So
Alphabet has recently agreed to buy the clean energy developer Intersect Power. This is pretty much an all-cash bid. I think they're taking on some existing debt as well for just under $5 billion. Are we going to see more deals like this where the hyperscaler actually becomes acquisitive in buying some type of power infrastructure?
I think this is the most interesting deal because in many ways what they're buying is actually knowledge. Intersect itself is a developer. They're leaving most of the existing actual power production assets out of that deal. So what they're actually buying with their just under $5 billion is the ability, the knowledge of how to bring power online. And that's been the big question. How do you go from announcing power to actually bringing power online, the coordination behind that, the permitting, the financing piece, the actually getting the supply chain right. All of these components are actually very difficult to pull off. And we've seen that over and over. So
to what extent is green energy going to be a driver here? Because we had information today, that is Monday in the States, that the federal government is suspending the leases on all 5 wind farms that were under construction off the east coast of the U.S. Are we going to see more situations like this where green energy is really under a cloud of suspicion or maybe doubt, and a lot of what comes online in terms of new power is going to be focused on carbon fuels or nuclear?
You need to delineate between different technologies. Yeah, offshore wind has always been problematic. It requires a huge amount of CapEx. It has operational issues. If I was building a data center in the Dominion service area in Virginia and I was concerned about getting grid power, I would be concerned about the cancellation of a big offshore wind project. On the other hand, if I'm building a data center in the southwestern United States where I'm using solar panels, I'm not as concerned. It's all about the exact technology mix, the connection to the individual siting.
Already we are seeing that residential electric rates have started to move up. Some people who look at the inflation component here are beginning to get a little worried, if they haven't already been worried over this trend. Is that something that will continue, that we're going to see higher prices, much higher prices for electricity in the new year?
In a word, yes. I think there's no doubt. If you look at what are called the capacity auctions, where people are auctioning off future power, we've reached record prices. And until we find a way to build out more power at scale, we're simply not going to see prices go down. There's not enough supply to meet demand. It's a very simple equation.
So if you have to push electric power across a grid over long distances, physics tells you that power is actually going to be reduced over distance, correct? So it would be much more beneficial to have these power sources kind of localized where they're needed.
And that's increasingly something you see, is what's called behind the meter or on-site generation for large data center projects in particular. Bringing co-located on-site generation is a big part of the strategy, and that's, I presume, what Google is expecting Intersect to do.
What about the use of solar as we look to the needs of electricity in the new year? Is this something that will grow? Are we going to see much more in the way of solar farms developed?
Amazingly enough, in the past year, it's still the fastest growing piece of the energy generation puzzle. It's very, very cheap. There's a lot of solar. It's something that's easy to install. It's distributed, to your point. Solar remains a big industry. The issue with it is that intermittency piece. So it's only operational, of course, when the sun shines. And so you need a battery associated with it, or you need to back it up with natural gas.
Well, that's an interesting point about battery technology. Where is the U.S. right now on that front? I think recently when Ford Motor announced that it was scaling back production of EVs, it was committed to retooling a plant in Kentucky to develop batteries that could be used for the grid, right?
Yeah, batteries are a massive growth area. Everyone needs dispatchable power. All of these data centers need to essentially be wrapped in batteries in order to control for what are called frequency issues. Batteries is just a buy across the board.
Does that take us into the conversation about rare earth minerals and relations between the U.S. and China?
It absolutely does. I mean, the supply chain for batteries is, just rooted in China. There are other battery sources, you talk about the South Korean companies, but China has deliberately, cornered that market. And so building up an alternative supply chain is a huge strategic imperative for this administration.
So in certain jurisdictions, state regulators get to kind of get involved when prices are set. Is that something that's going to become more evident as we go out into 2026, where state utility commissions or other regulators are going to be kind of trying to cap the rate of electric power?
You've already seen it. I think intervention is definitely going to happen. I mean, if you get higher prices, people really feel that. It flows directly through to the voter. You're going to see you're going to see intervention trying to control for prices. The problem then, however, is that, investors are going to hold back, which means that the supply situation only gets worse. High prices are a solution to high prices. You need to let prices go up.
So if we look away from green technology, whether it's solar or wind farms, and we focus for a moment on kind of carbon-based fuels, and I'm thinking of the turbines that are actually involved in that production, and I'm thinking of a company like Siemens, for example, or maybe to a lesser extent even General Electric, and I don't know the extent to which GE is still a player in this space. Are these companies going to be able to meet demand here?
So this is Vernova, which is part of what used to be the great conglomerate called GE and Siemens. They are building very quickly, but the fact that they are not adding as much capacity as they need to in order to meet the market, you've actually seen people redeploy airline turbines, in order to do very quick power, because it's fundamentally a very similar sort of engineering.
What about the power that's used to drive those turbines? I'm thinking of natural gas, fuel oil. Is there going to be much more in the way of mining those resources?
I mean, I think drilling for gas will almost inevitably go up. There's a big export demand. There's a lot of domestic demand, as we've talked about. Like, that's one of the things that could back up renewables on the grid or be used at data centers. So natural gas is a growth area for sure.
So are you optimistic about the power industry in the new year?
Absolutely. There's only one way for it to go if demand keeps up the way it is.
Okay, and what type of return can we expect? Is it going to be outsized versus, let's say, the overall equity market?
I will say that there was just some analysis just today that the private equity purchase of a natural gas generator called Calpine was, I believe, the largest in dollar terms for a return ever. So we're talking about some very big potential numbers.
So if a lot of this is kind of linked to where the U.S. happens to be in the AI story right now, is there the risk that competition from China maybe takes a little bit of supremacy here and in some way reduces the demand for power from the U.S.?
Look, the worst possible outcome for the United States economy would be if China takes the lead in AI because they have so much power and thereby, relieves the inflation for power in the United States. What needs to happen is better coordination, more construction, more building. That's the solution here.
So when you say that, you're talking about across the 50 states, right?
For sure.
So is there anyone that's kind of getting this in terms of the people who are making policy within the Trump administration? Do you think that they've got it right?
It's more about looking at individual states. So I think if you look at Texas, massive energy build out over the years. And I think that we're seeing a lot of energy intensive industries relocate to that region, in part because they've managed to build out a lot of power. And so I think if you see some of that same market structure be applied to other regions, the northeastern United States, California, you could begin to see a much faster build out. In
terms of the build out that we've been experiencing here in the U.S., private companies versus some of the public players in the energy space. We're speaking here in New York. I'm thinking of Con Edison, right, who is a major supplier here in New York City. Private equity is becoming increasingly involved in this space. Is that do you think going to be well funded next year? Is there a lot more money that's going to be flowing into private equity as it relates to energy production?
We've seen a continued ongoing boom in fundraising for anything to do with energy on the private market side. I think, and after today, TPG, private equity firm backed Intersect, we're talking about another private equity firm that backed Calpine. These are big, chunky returns that will bring in more capital.
What is the one thing that you're worried about, though, in regards to this industry as we look out to the future?
Lawsuits. I think, when it comes to permitting, everybody's allowed to sue everybody. Anything that delays power build-out is a bad outcome here.
Peter, we'll leave it there. Thank you so much for dropping by. Peter Gardett is the CEO of Noreva AI, joining us here on the Daybreak Asia podcast. Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.